Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This video is being filmed on Wednesday for Thursday's trading. That's October 15th, 2009. Traders, a couple of things that we're going to discuss. The S&P is gaining strength continually, as you've seen since March, as is the euro currency gaining more and more strength, and with that brings dollar weakness. In fact, the last video we did for you just a couple of days ago, we mentioned that there was a double top, and people were talking about the double top. That's possibility there in the S&P and in the Dow Jones, and I said, no way. It isn't the double top unless the leaders put in a double top. And we said we're going to buy right through this and expect the S&P to go higher. Thanks to technical analysis, what has happened? S&P's gone higher, baby. We also talked about euro currency moving up and dollars moving down since the last video a couple of days ago, and that's exactly what's happened. Euro's gone up and dollar's gone down. And I think euro will continue to move higher and dollars will continue to move lower. I have a couple of charts I'd like to show you in a few moments about that. I want to show you what the S&P looks like, what the Dow Jones Industrial Average looks like, what indicators look like on the euro currency, and what the euro currency itself looks like. So we are going to look at a few of those charts. I just want you to remember, traders, we've had a green arrow on this board for weeks on end. Every now and then there's a one-day shake. We take the shake and then we go right back up. And I think it's going to continue. So far, so good. Trade the analysis. Trade what's on your charts. Do not trade the news. Do not trade what you hear. And certainly don't trade the wacky stuff you read on the internet. All I hear about, it's the end of the world. The dollar's going down the tubes. The United States is going to be broke. And everyone in the United States is going to die. You got to hear all the crazy stuff that everyone says. And I'm here to ask you, what is it, just the United States that did a stimulus package? Your countries did stimulus packages. Why do you think the United States is going down? I don't get it. People trade what's on the charts and stop trading the nonsense rumors that it's going to be the end of our currency, and because of all the money that Bernanke printed, the gold's going to be at $1 million and the stock market's going to go lower than zero. I don't know where you get these crazy ideas from. Traders, do you have any idea how much money the Fed has made on partnering up with these banks? They partnered up with the banks at the lows of the stock market. We've been going up for 6-7 months, and the banks have been raking in dollars, and the Fed has been raking in big dollars from helping the banks. They are making their money back. So you people out there that are crying your eyes out that the Fed did this and the Fed did that, if you don't understand it, especially then, don't trade it. Fundamentals always come out in the charts. First, they have been bullish. That means the fundamentals are bullish. Make sure you know how to read this economy. All right, traders, just wanted to get that out because I get so many people from my chat rooms. They fly in and it's the first thing they say, Oscar, it's the end of the world, blah, blah, blah. Then they blame it all on Bernanke as if your own country didn't print money and do a stimulus package. So look at the world for what it is. Look at the markets for the charts, and then gauge from there. All right, traders, that's the end of that speech. I just wanted to get it out. With no further ado, let's go to the charts. Okay, traders, this is the very same chart we put before you a couple of days ago in our last YouTube video. This is the December S&P daily bar chart. As you can see, a well-defined parallel trend. Then we put in this bull flag, broke out of the bull flag. All the talk about the double top came in right here when the bull flag, when we came to the top of that bull flag. We predicted via technical analysis that this market would get above this trend channel, and it would get above the previous high, and it would just keep on going. And what happened, traders? Here we are right now. We got above the trend channel. We blasted right through the previous high. This is what we wanted to see. We wanted to get back in that trend channel. And from here, the likelihood of moving higher is much greater than it just was a day or two ago because we were below the trend channel. Now we're back above the trend channel with bullish indicators. And I say this bad boy just keeps on making new highs. Let's see what we're going to get. So you're looking at the S&P December daily bar for what should happen on October 15th, Thursday, 2009, right? And if it were just in the S&P, of course, I wouldn't have much of a case here. But I look at all the other indices and I see what they're doing. Let me show you what the Dow Jones Industrial Average looks like right now. Okay, traders, Dow Jones Industrial Average daily bar chart. Once again, like the S&P, the call for double top came in right here and nothing happened. We blasted right through it. Again, traders, that was our prediction 2 days ago in our YouTube video, and we do not guess at this. We use technical analysis to give you the market calls. The technical analysis said we'd blast through the double top, and we blasted through the double top. Now, if you look closely, you have an inverted head and shoulders formation with a projection. So here we go. We're predicting that the Dow will trade 10,150 this week. There's 2 days left to go. So the very, very high likelihood that we will make the projection off of this inverted head and shoulders takes us up here to 10,150. We settled right here, traders. We're not that far away at this point. Nice run, nice strong market, maintaining its bullish posture, then puts in this inverted head and shoulders, which is a bullish formation, and gets above its double top. I say we go reach that projection of 10,150 in the Dow before this week is over. Pull your charts, traders. Do your own homework. See if you agree with this strategy. I like it very much. One caveat, and I know it's there, but I am not going to use it because there's only one of them, and that is the Nasdaq does have a qualified double top as of today's close. There's a high in the Nasdaq. We came off. We went to that very same high as of Wednesday's close and stopped. So there is a double top in Nasdaq. We will not take that as the signal to go short because there is no double top in the Dow Jones Transportation Average, and that's the one that's the true leader. So we are going to go with the S&P trade. Of course, if it turns out that the Nasdaq's double top is real and it knocks the S&P down, our stops will be in. We will get knocked out at a level we can all live with, and then we'll take a shot at this market the next day. So trade with your stops. Don't be afraid of this market, traders. I say we make new highs. Let's go look at the euro currency. Okay, traders, the euro currency December daily bar. As you can see, there is a nice channel that has been forming for the past few weeks. Then within that parallel channel is a secondary parallel channel that we have been trading in very smartly all the way through. And I say we get above it and we try to get up as high as this parallel channel right here. That's what euro currency looks like it wants to do. The chart pattern is strong. As you can see, we have a major parallel channel, then a minor parallel channel within it, both of them bullish, both of them calling for higher. Now, the beauty of it is not only do you have a bullish formation, but you'll see in a moment we also have very nice looking indicators wrapped around the euro. Let's go look at some indicators here. Okay, traders, this is euro currency December daily bars slow stochastic oscillator indicator. These slow stochastics, as you can see, are pointing up. If it's pointing up, it's bullish, especially if it's not above the 80 mark. It's pointing up right now, and I like it. So that's your stochastic indicator, and it's a bullish look on euro currency. Right, let's look at the next indicator. Next one on the board right here, we have right behind is the RSI, or Relative Strength Index of the euro, once again pointing north. So as you can see, indicators are clearly pointing higher. One more indicator that we'll look at on the euro, that is the ADX, or Average Directional Movement Indicator. That average directional movement indicator, once again, is clearly pointing higher, and I think the market will follow it up. So our indicators on euro are certainly bullish. The euro chart itself is bullish. The dollar chart is bearish. That means euro should likely go higher. Do your own homework, traders. Pull your indicators on the euro. Pull the S&P. Take a look at the way it blasted through its previous highs. Did not make a double top. Look at the indicators there. Look at your Dow charts and compare your notes to mine. I'll see you at the site, traders. So, traders, you've seen those charts. You see what the S&P is doing. It is bulling ahead. Same thing with the Dow. Then if you take a look at euro, Euro's really gaining some strength here. Euro looks like it wants to be at 151 like that. We'll see what happens. And its indicators are bullish, while at the same time, US dollar is a bearish look on the chart, and the indicators are bearish there as well. So Euro strength, S&P market strength, dollar weakness. I like what I see. Make sure you do your homework. We have another interesting little setup that we found. Sugar's got a swing day. Sugar swing day. You traders who watched that last video, we showed you a swing day. Did we do a swing day in that last video? No, we didn't do a video last night. Oh, forget it. Last night we found a good swing day in soybeans, took it and profited on it. Today we found a swing day in the sugar. However, we did not do a video last night on that soybean swing day. However, swing days work well. There is a swing day in sugar. Go take a look at that for yourselves. Make sure you always do your own homework. All right, traders, we're getting into Thursday now. This week has been good so far to the indices. I think it will continue to be that way. Make sure you come on down to the site. It's www.livewithoscar.com. Jump into the chat rooms. Make sure that you grab a free membership and come learn with us. Traders, we have over 502 videos, a lot like this one. Some have a lot more charts and a lot more lessons in them right on YouTube. So make sure you watch our videos, traders. We have a lot of them out there. Go take a look. Mikey, what are you pointing at over there?
Omnicamp.
Omnicamp. Oh, my goodness. Traders, Omnicamp is going to start on November 6th. We're doing Omnicamp November 6th, 7th, 8th, and 9th. And basically, it's a sold-out performance. Thank you all so much for filling out your applications. We were only able to take a handful of you. The traders who can't make this Omnicamp will do our best to plan you another one. So, OmniX, thank you so much for filling out your applications. And I'll see all of you in Vegas in a couple of weeks, baby. All right. Hey, give me a call anytime, Darren Knight, 702-629-4755. And don't forget, 2 days left to sign up for our trading contest, traders. We have a trading contest here at our site every other week. You get a $10,000 simulator, so it's simulated money in a simulator. You get to trade the markets, and if you win, you get cash prizes, real cash prizes from us here at the Omni Trading Academy. So come on down to the site. Make sure you sign up for the free contest. All right, traders, I'll see you at the site. I'm on my way out the door right now. Remember to keep your emotions out of trading. One of the best things you can do is say this to yourself over and over throughout the day, especially when you're trading. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.